the coming weeks and months. I think that the price of silver is just beginning. I really, truly, truly do.
What Andy Schectman just revealed about gold and silver changes everything. Not next year, not next month, but right now. He's warning that the window to prepare is closing, and the signs happening behind the scenes are bigger than anyone realizes. If you think the last few months were wild, you haven't seen anything yet. Stay with this video, because Andy is about to explain the next major move in gold and silver, and why it could hit faster than anyone expects.
Yeah, it is. Only 2 days, well, today's day 3, I don't have the numbers yet, but 2 days into the December delivery month, and there's already been 23,970 gold contracts that have stood for delivery. That's 2.397 million ounces, and plus 8,305 silver contracts, or 41,525,000 troy ounces issued and stopped so far, and the month has just started. It's also relevant to note that in November, which I would say was not normal, the silver deliveries ended the month at just under 20 million ounces, about 19.7 million, which it's really crazy because November is not a scheduled delivery month for either silver or gold. There was 1,267,000 ounces of gold delivered. Issued and stopped is the correct terminology. But you know, the first day, this month, the December contract, day 1, we saw 7,330 contracts stand for delivery in silver, which is 36, almost 37 million. That's more than $2 billion worth. And although it's not a record, it's close to it. April was the biggest record of just under 12,000 contracts. But to see a 2-day, you know, that's day 1 and 2-day obviously added more, but it's just insanity where there's already been 2.4 million ounces of gold and almost 42 million ounces of silver delivered in 2 days. This is the same type of volume that we've seen all year long. And, you know, it's funny, you and I started talking about this in 2020 before anyone did. And now it's just mainstream and, well, mainstream in our business. And I think this will continue until it doesn't, meaning until stuff is just depleted and it's becoming more and more obvious that this is an imminent deal. At the same time, you have one of, if not the largest short position in COMEX futures market, you know, along with a massive short position in SLV, one of the largest ever. And at the same time, you have the LBMA, which is running on fumes. And, you know, it's a situation where the delivery via mechanisms are breaking down. Almost 90 million ounces have been delivered off of COMEX this year, and or excuse me, since October, pardon me. And I don't know, since October 1st, 90 million, it's accelerating at a level that I don't think people understand or take for granted. And I think the way that you break that up is just to simply say that, you know, let's make an analogy, right? For years, everyone pretended that, let's call it a cardboard box was full of cookies. There's a picture of a cookie on the outside. And the thing of it, and they would trade that. But now everyone is saying, no, I want the cookies. And people are realizing that the box is pretty much empty. And when that happens, this pretend cookie game, which you could call the derivatives, falls apart. And real cookies, gold and silver, become much more valuable. And that's why prices are rising. And why the dollar and other currencies may look weak when the truth comes out. So, yeah, I think it's a big deal. There was this report that JP Morgan shifted its offices to Asia in the middle of the night, that they were told that the people had like 5 days to move their family and everything to Singapore. I believe that is false. So everything that I'm reading tells me that that's not true. I guess we'll find out and we will see, but I know a lot of people have been asking about that. The bottom line, then again, to me, is that the market runs on trust. And when you believe that you'll get delivery of what you were promised, and that trust has been built up over decades, then the system works. You buy a contract, you can stand for delivery. The metal's there. That's why COMEX has set the price of gold and silver forever. And the analogy is like a bridge that handles a whole bunch of weight until it doesn't, like the 35W bridge in Minnesota that collapsed that I drove over 5 million times. And you're seeing that in London. You're seeing that in the COMEX now. And I don't know. I think that this is going to be a story that gains a lot of traction over the coming weeks and months. I think that the price of silver is just beginning. I really, truly, truly do. And that nonsense of a outage, a glitch and an outage of air conditioning at the CME, a cooling failure, is a bunch of crap, because only the metals markets went down. The other CME markets, like the bonds and the FX and the repo and the equity futures, well, they stayed online. It was a technical failure isolated to only one asset class, and low volume that day, yet the whole thing went down. To me, it just is telling you that things are breaking. And I don't know. I think that this is just the beginning. We saw 12.5 million ounces were transferred out of the COMEX registered category on November 26th. So, where's it going? Who's buying it? How caught are they? These are the things that I would be focusing on right now. To me, that's the most important thing to talk about today. I would just simply say that if a market loses trust in how prices are discovered, or if it can quickly shift the rules, so too will the price discovering. Will shift elsewhere. And to me, all roads lead to the same place, and that's Shanghai, which becomes the price mechanism for physical silver. It will take over for the COMEX. And, when you play these games, we've seen it now in London with the nickel market. We're seeing it here. It's what they did to the Hunt brothers. They changed the rules. They'll raise margin requirements. They'll do all of these things. But when you end up seeing, when you end up seeing a failure of trust, a massive breakdown in trust, I believe that shift will happen. And, it will kind of be like London losing its grip on oil pricing, and move to the NYMEX. And, they ran it for a long time. Now they're an afterthought. The same thing will happen here. I believe that the world will be so angered, if you will, by the fact that this has been a game that has been played for a long time by the West, that it will move to the part of the world that, the center of gravity will move towards Asia, I guess is what I'm trying to say. So, yeah, I think that that's going to happen. I don't know when, but ultimately, in a world of probabilities, I'd put a high level of certainty on that at some point, it just moves to the part of the world that is cash and carry instead of promises and rehypothecation. In other words, you buy in Asia, you pay your money, you get your bars, and out you go. And before you buy it, you have to buy a bar from one of the pre-approved refineries, and they laser etch the number of the contract that you have on that bar. There is no shenanigans there. It's all about shenanigans here in the West. Well, it's interesting. The technical analysis would say you take the cup and handle, when it breaks through the handle, which it has at over $50, that you take the top of the cup in 1980, which was 50, the bottom of the cup, which was $4 in the 90s, and the difference is 46. You add it to the top, and that would say $96 would be the next technical resistance level, if any, or that would be the projected next place to go. And if you take a 42-to-1 ratio right now, or even call it 45-to-1, where it's averaged for the last 100 years, the silver to gold ratio, even though it's been coming out of the ground for 5,000 years, it's 16-to-1, and now it's 7-to-1, meaning it's depleting in nature. The price ratio, largely because of, in the Western world, gold's role as a monetary metal and silver's role in industry, it's average about 45-to-1. So you take gold today at 42.40 and divide by 45, and what do you get? 42.40 divided by 45 is $95. Well, isn't that interesting? that would be where it would tell you to go, where you take the top minus the bottom, which is 46, add it to the top, that would say $96. So, I mean, if you were to see silver at the end of the year at $96, it would not be crazy at all. And if you take 42.40 and divide by 7, it's going to be somewhere around $600, 605. As insane as that sounds, that would match the geologic footprint right now. So yeah, I think silver is the asset of a generation. And I want to always hammer it home. I'm not telling people to buy it to become wealthy. It is wealth. And the biggest money in the world is showing you that. The sovereign wealth funds and the central banks, who have now largely reclassified silver a critical mineral. The U.S. government has. The EU did it in 2023. China just did it, and they are restricting exports. And China, as we've said ad nauseum on your show, the second largest producer in the world, is flying to Peru and Mexico and buying doré and concentrate, paying twice what the rest of the world will, and ship it back to refine it. If they're the second largest producer, then why the hell are they?
If this opened your eyes, make sure you hit like. It really helps the channel grow. Don't forget to subscribe and tap the bell icon so you never miss Andy's next big warning. Stay prepared, and I'll see you in the next video.